Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. Thank you, Lucky. And good morning to our visitors to the Trader Lab in YouTube. Thanks for stopping by today. This stream is about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to all of you in the Bookmap Discord Trader Lab community, and there is no cost. The stream is really about helping traders understand the business of trading, how to develop trade plans, and develop potentially a statistical edge and an understanding of the actual business you're in. Statistical edge is about only engaging with the other market participants when you actually have a probability that favors you versus them. And if you can execute this edge when it shows up, and you have the psychological wherewithal to just wait for your trades, over time you might be able to sit on the side of the table, you might say, that extract the dollars from the other participants versus them extracting them from you. And of course, the other side is always extracting dollars. The dollars flow both ways, to the gamblers and then to the house, if you want to consider an analogy to how casinos operate. However, the house has the edge. So over time, in a random distribution of outcomes in a casino, the house extracts the dollars from the gamblers, and they're doing pretty well with that, wouldn't you think? I mean, not only do they pay the gamblers, but they also give you the cocktails and the ticket to the buffet, and maybe tickets to Adele. How can they afford to do that and build bigger casinos? Have you thought about it? Well, it's because they only play games with a statistical edge, and they're very disciplined. They don't make the games up. They don't skip the next hand if they pay the gamblers. They just show up and do their job, and they do it consistently with something called anchored inputs. This is what, in my opinion, at least my experience, is what our business is. So instead of thinking it's a video game or a business of being right and confirmation and indicators and time frames, and we all have winning trades, by the way, and that doesn't mean you'll be profitable. How do we differentiate ourselves from other retail traders? And we know statistically for most retail traders, they do not have sustainability. The failure rate is huge. Are we going to continue doing what they do? Or maybe we might want to consider other options that are available to us for education and understanding of the business we're attempting to be in, and that's the purpose of the Trader Lab. So, with that being said, general disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, grab a pen and paper. I'm going to go over some statistics today so you can get a sense of some of the tools you might deploy and how you might use them. And of course, like everything else, risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is not a trade calling room. This is to help you understand how the market works, why it does what it does, how you can get in alignment, build a business. And of course, everybody's mileage may vary. Trading is not for everybody, and the work it requires to get into a place of sustainability is going to be more than you've probably ever imagined it would be. And the reason for that is most of us come into the business thinking we can get predictability and confirmation where it doesn't exist. Kind of a dilemma for us since we're wired to avoid uncertainty and risk. In fact, run in our body, if you will, or our primal wiring perceives operating in this environment like being face-to-face with a predator. So we're always running from risk, because that's how, as a species, we have survived. So when you step in the market, you're already conditioned for failure. So, and that's because you're pushing against our DNA, our genetics, and everything else that's gotten us here as a species. So you really need to look beyond your indicator or this prediction and thinking you're going to have an ATM in the basement. There are many more elements. Now, these elements can be mastered. In my opinion, anyone who's had sustainability in the business has had to come to terms with these elements. However, most of us have no idea what they really are. And even when we experience them, we it's not part of our consciousness because it's such a part of our uh, primal wiring. We're not conscious of these chemicals that are released in our brain, how it disrupts our intentionality. All that is part of what is addressed in Trader Lab. And of course, you have to do the work, and you will find this more challenging than anything you've ever done because you've never had this experience. So grab your pen and paper. Let's take a look at a couple things. Let's go look at the higher time frame. Now, today is a very interesting day, right? I don't know. You know what? The funny thing about this business, every day is unique, yet it's unique individually and at every moment. On the other side of that, if we understand market mechanics, how the market works, why it does what it does, we can, you might say, estimate the potential. And then as the market develops, we then adjust with it. And the business of trading is about trade plans. Now, when we say trade plan or business plan, there's not one plan. The plans are different based on the condition of the market. Now, the other joyous part of this is the market is fluid and always changing. So it's almost like if you guys ever have driven a manual transmission, which I know they probably don't even make them hardly anymore. When you're on a flat surface, pedal to the metal, and you're just going. But when you get in the mountains, you drive differently. You downshift, you change everything. The speed is different. How you shift the gears, it's a different plan, isn't it? So if you're on the Autobahn, off you go. And we were in the Autobahn yesterday. Today, we are not in the Autobahn. Today, we're in the mountains. You can't bring yesterday's plan, at least in my opinion, to today's mountain driving. Does that make sense? So let's look at today. And if you have questions, please post them. I'll do my best. Let's see. So, first of all, we got to go to the higher time frame. This is our eventual target up here. It's around 60.06, and there's another one that's 60.18. Now, the reason this is here is because in this consolidation, which is from this swing low to this swing high right here, this is a balance area in the profile, and that's where the highest volume is. The market tends to go to volume, and it goes to volume because at one point, all the trading in here, the highest volume was here. So it's like, I'm not paying that. If you go to the store and the price is too high, and you need a can of tuna for your casserole, you might buy it, but you'll notice there's no volume up here. Too high. Now, if we come down to the other side, there's no volume here. Why? It's too low. The price was on sale. And when you go to the store, if the price is on sale, it doesn't stay there, right? So the sellers will sell. And if it's too low and the buyers perceive it as undervalued, the market will come back to the high volume or the retail price. And most participants are willing to do business, sellers and buyers, because it's a fair price. So if it's too high, I'm not paying that. If it's on sale, give me 10, throwing them in the cart. Retail, all right, I'll buy my can of tuna here. Now let's come over here. Remember, too high. Now why, if it's too high, does that mean we're never coming back there? No, it means at the time, based on what the perception of value was, that this might have been too high. If I break away from it, then I can maybe find out what is too low. And if I find a test of what was once too high, and I gap, that was the tariff poise gap, and I open above it, and I test it, and what was too high becomes too low, then what? North of the border. To where? But now let's look in between. Now I'm going to show you some interesting phenomena. And I think of it, and don't forget, this is about the auction. And don't forget, grab a paper. I'm going to give you statistics because now we're going to put some pieces together. Hope you get something out of this. Now, the orange lines are they're called microcomposite volume points of control. It's market profile language. Think of it simply like retail. So if we look at this as one auction, this is too low, and we tested this. Oh, too low now. Used to be too high. What was too high becomes too low. Oh, it's on sale. Throw 20 in the cart. Okay. Now, this price here, this yellow line, is the same thing, but only as it relates to each individual RTH candle. So the high volume was here. What did we do? Well, we opened, we came down, and this is too low. We didn't even get to it. Don't forget that it's there. It may be on the hit parade on the way down. Then what? We have high volume. Hold on one second. Sorry, guys. So we have high volume here. Now, which means this is the fair price up here. This is the fair price on an inside day. Now, what happens on inside days? This is all very interesting to me. Where's the sell stops? Well, under there, and inside day. Where are the stops? Under here. What did the market do? Market went down, took out the sell stops under here, and then closed higher. And the retail price is there, the yellow line. What do we do the day before yesterday? Test the retail price, too low, go up, and that's Friday, and then the news came out with the credit downgrade. And then we closed down here. So what does that tell us here? And the yellow line was up there. That's your retail price. Well, news, and we closed lower. This is too, but what's under here? Stops. What was under there? Stops. What's up here? What's up there? Stops. So what did we do yesterday? Open lower, take out the stops, and then have an outside day. What does that do for us? That's the retail price from day before yesterday. Out here is a potential target, which is here, neither here nor there, but this is sitting open. So how do we trade today? What does that tell us about today? This is where things get joyous. Well, now write some statistics down, and I'm going to read something else to you about context. And this is a grid sheet. It's available to all you guys in the Bookmap Discord Trader Lab community. Okay. How are we doing in YouTube? Are you guys conscious? I want to make sure nobody fell on their keyboard or hit their head on the monitor. Please give a like if you're in YouTube. Hopefully you're going to like this. I think you're going to find this interesting. So let's look at the context. First of all, we know the trend is up. Okay, we all agree. Trend up. What did we do yesterday? Very important. Grabbed inventory on the when we opened under Thursday's low, or Friday's low. And this to me was the gift that keeps on giving. And it's in the stream from yesterday if you haven't seen it. You guys, I do suggest you look at it. Every once in a while, the market hands you, I'm going to suggest a gift. And if you understand how the market works, that was the gift that hopefully keeps on giving. But now let's look at today. So we have an outside day. What do we know? We know the market is long. Okay, you're going to say, Einstein, you're brilliant. Here's the other part. If the market's long and there's longs in the market, there's two possibilities here. Well, one, we keep going. Okay. But more likely, if we don't get higher time frame participants in here, which were in here yesterday, then possible is we're going to stay either in, and this is all posted in Trader Lab pre-market, we're either going to have an inside day where we just consolidate and abuse everybody equally. Part of that's going to mean taking out the weak longs that are hanging out. And the other possibility is that we eventually test yesterday's high a day. But don't know. Now here's the context. We're opening in range in what's called value. What does it mean? Always I'm asking myself, what does it mean? So Yesterday's high is there. Yesterday's low is somewhere off the map. So we're opening in range inside of the previous value area. Value is where 70% of the volume took place. So value area low, value area high, settlement. So we're opening wherever it is, over here someplace, lower inside of yesterday's range, inside of value. So let's start. What does that mean? It means that we're in balance. What do we anticipate? Likely a neutral day or a low conviction day. A neutral day means we take out the first hour's high and low. And we don't have to, of course. But neutral means nobody's in control. We're just abusing everybody. Equal opportunity to take a stop. So low conviction day. So now the next question becomes, are we breaking out of value? This is the 70% of the volume from yesterday took place in here. Yesterday's high is here. There's stops above yesterday's high. And of course, there's going to be stops under yesterday's low. Now, so if the market's in balance, what do we want to do? We want to trade outside in. That's called mean reversion. What it is telling us is that the market perception of value at the moment, and this can always change, has not changed. So we can anticipate sloshing. And why might we think that? The market has opened in value. The sentiment of valuation has not changed. And until it does, we expect two-sided trade and reversion to the mean. Reversion to the mean is outside in rotational trade. That's where we are at the RTH Open. If you have a trade plan and you're in the Trader Lab, you would already know what you would do. You just need to let it set up. And then if it aligns with your plan that you have vetted, and it meets the requirements of the specific trades that are in alignment with the condition. That's why it's a specific plan for the condition. Then you put your helmet on and welcome to trading. So let's look at statistics. All this is done in Trader Lab by individual traders who have a vetted structured trade plan. This is a strategic endeavor. What we want to do is create an edge and only interact when that edge shows up. Otherwise, sit in your Barca lounger and watch reruns of Lost in Space. So we're opening lower inside of range. What are the probabilities? Now write these down. Taking out either the ET, and these are ballpark, and they're not exact. They can be a couple percentage one way or the other. Doesn't matter. And there's nothing rigid in trading. It's only maybe. So taking out the ETH high or low, 93% probability. Taking out both the ETH high and low, about a 20% probability-ish. You have to vet these. Now, this is the one that has me interested. Taking out the previous high or low, about an 85% probability. That's the one stat that keeps my brain kind of circling over the airport, because 85% probability to come here. However, given that we don't have anybody in control, if we don't get there, then it's just going to be two-sided rotational trade. So that's the only one for me that suggests you got to be conscious versus unconscious. So, and then the previous value area high or low, about a 90% probability we get there or there. You'll notice, I think we already got there. So we fulfilled that one. Getting to the overnight volume point of control, which is the retail price from the ETH. Why am I giving you all these stats? Because this is edge. Now, edge is not prediction, but if you understand market mechanics, you can then align your trades with the statistics. And the thing that throws many retail traders off is they look at a statistic and they trade based on a statistic. The statistic is not numero uno. It is ancillary input. So if we get aligned with a direction based on the participant behavior, then we can look to these. So the overnight volume point of control is about 83% probability. Getting to settlement is about 72% probability. Getting to the overnight mid, wherever that went, it's got to be above us. I have to give you all these so you can kind of see. And this is all available in TraderLab, but overnight mid, 83% probability. Previous point of control here, 70% probability-ish. Taking out the first hour's high, 69% probability. That, and let's see, ETH high, 49% probability. So just to give you a little sense of it, other than that, the previous day's high or low at 85%, I don't have much going on here. So that's why I'm thinking two-sided trade, take out the first hour's high, maybe not the first hour's low, but we can because it's two-sided trade, and which doesn't matter, of course. And we have to be conscious of either an inside day or reaching up to yesterday's high. And we may or may not do that. Now, let me go one piece further. Don't forget, settlement, yesterday's value area high, possible. Yesterday high, 85% probability, clueless. But what did we do? We checked it already in the ETH. Low probability of taking ETH high and low. Do you see how statistics can help you? It's not predictive. It's only maybe. This is before the market opens. Now, RTH open. Any questions before I get started here with to give you the review of what happened? Is this making sense, guys? How we doing in YouTube? Please give a like and subscribe to the channel and use the link in the bottom of YouTube if you're interested in visiting TraderLab. So you got your statistics, you got your context, you have the condition of the market. We know the trend is up, and we know there's weak longs in here. So all this is posted in TraderLab and discussed, and that's why if you come to TraderLab, it might help you. And then again, maybe not, but you're going to have to roll your sleeves up. If you're looking for somebody to hand it to you, probably not going to create sustainability. Of course, that's up to you. Now, so the idea of today is for a couple things. One, the market is long. That means the longs in here, the weak longs, when we open in range, then we can anticipate something called selling, responsive selling. They're responding. If you're long, you're weak. If you're a retail trader, you're going to take some profits. So the first opportunity here would be shorts. And the other part of that is also not doing anything. You could just sit here and wait. So this is the first thing. Now, when I was looking at this, I'm thinking to myself, well, first of all, I'm looking for selling. And the selling is not strong selling. It's going to be weak selling. So that's important. Weak selling. And I want you to see something else right here. What is this? Anybody know what I'm looking at right here? First of all, market opens. This is called the variable high volume node. I'm going to take you through process. Now, process is just a way to try to organize participant behavior. I call this a variable high volume node. And what it is, I'm tracking the retail price based on the shoppers. Now, this starts at 0 when the market opens, okay? And don't forget, in the ETH, this was the retail price, overnight volume point of control. And in yesterday's RTH, this is the retail price. What does the market tend to do in all fractals and time frames? It's shopping. Trading is shopping. The shoppers said too low. All right, where might we come? Here and here, because we're under it. Maybe it's too high. I don't know. So I come up here. I get VPOC migration. What does it say? Language? New retail price. Oh. Going to the moon, Alice. Too low. Watch. So when this breaks below, It is suggesting the possibility, again, possibility to come there, and then I'm heading for my statistic. Remember where the overnight high is. It's way on top, above yesterday's high. What are the odds, and that means probabilities, I'm going to get there before I get here? Well, statistically, the ETH low has a 66-ish% probability versus the overnight high. I don't know about you. I'm aiming the barge here. What about yesterday's value area low? I know you write these things down. I got so many statistics, I can't find it. 71% probability. Can you see how statistics might be material? I'm going for this. Who knows? Is everybody tracking? This sets up a short if it's in your plan. Now, I put a line here because there's something that's very important that just happened here. And I looked at this and my teeth started chattering because my trade is to take a short for the sellers to get the weak longs out. So I'm trading into their stops. That's the concept. And I'm using statistics. Just want you to know. So when I take a short up here, I've got to get under here. But my stats suggest this, so I'm good. Now let's look a little further. Liquidity is resting in the book, and where is it? ETH low. So this sets up the short. Let's just look at it. Notice where we come, right? Weak high, weak high. This, make your teeth chatter. And what else is here? Liquidity. Now, if this is not your trade, there's nothing to do, okay? For me, when I put a trade on, I have to get risk neutral. I do it all the time because my job, number one, is to be a risk manager. So my job is to get risk neutral. And since I'm opening in range, in value, I'm anticipating two-sided trade. And that sets up something that the actual process to trade this is outside in. Outside in. Outside in. It's called mean reversion. And all this is in TraderLab. So the idea is you're trading this way. And statistics favor this. So first trades for me were shorts. Now I want you to remember this. What is this? It's the opening swing high. If the market's in balance in an uptrend and the selling I get first thing are the weak sellers, the longs who are weak, which is retail traders like us, and just other traders who go, wow, I didn't gap higher after yesterday. I guess I better take some profits. And then we get shorts coming in. Then we can come down. But what else do we know? If it's two-sided trade and we're anticipating potentially an inside day, or maybe we'll reach, I don't know, then I have to be conscious of only trading on the outside. And the sellers here, wherever those guys are, their stops are above the opening swing. So if I'm in two-sided trade, I'm anticipating coming out the top. And then I have statistics here, you know, up the food chain. Does that make sense? Uh, 8:30 to 1600, JRB, yeah. 8:30 Central to 1600 Central, 4P. I don't use the cumulative volume delta. It's too lagging for me. I don't use it for anything. It's just not part of my thing. Even the chart volume delta, I see it's going down. Well, okay. Does that mean I don't get long? Because if I'm in mean reversion, the delta will be negative if I'm going to take a long. You see? So I can't use it that way. I do use delta this way. So this is the delta. Now, cumulative is just taking all the delta, fine. But what I'm interested in is what happens at the delta. So if this is negative delta, what is happening? Or just as, and I'm answering your question so you know about delta. I'm looking here. I'm looking at these segments of delta because it's what happens. What happened here? 123 sell stops. These are your retail traders, in my opinion, that are getting thrown under the proverbial bus. And what happens to the sellers? The icebergs absorb them. Now that is material. Me. So I have more delta. So I have less sell. So look at this. The sellers are here. So you get, let's go back. Buyers, less buyers, selling delta, higher than that delta, more selling delta, sellers taking control, sellers in control. What's going on here? Nothing. Buyers are now taking over. So when I see the excess of delta, I don't know what's going to happen, but I do see the buying icebergs and the sell stops. Often what you're going to see is retail traders getting tossed under the bus and the icebergs taking the other side. They are absorbing those sellers, the sell stops. That's what creates this. Okay? So that's how I use delta. This, don't need it. It's not worth my time based on how I trade, not how you trade. I'm not saying anybody should do what I do. I have no idea. My stops are sitting up here. My liquidity is sitting over here, and I'm rotational, and I'm coming down again. Remember where my targets are. Here, here. Okay? So the shorts are primarily to here, and I have resting liquidity. Okay? So this is the first sequence of trades. Now, I got to show you this because, and I think I posted this in TraderLab. It's very interesting. Now we're anticipating two-sided trade, right? No clue. Right here, I'm going to show you now structure, and we've had an interesting conversation this morning in TraderLab about an element, and I'm going to mention that to you. Now, don't forget, target, clueless. Now, this is material, but, not the highest thing on the food chain. Let me show you this. I got to take you back to the higher time frame just for a moment. 49 is an outside edge of a higher time frame distribution. Kind of important. Outside edge of a distribution. How does the market tend to go? On sale, retail, too high. Now I go to a higher time frame. This is on sale, and I can come back. Now I don't know, and there's no precision in the auction. It's always like, I don't know. How we doing in YouTube, guys? Okay, so coming down, we have the following. Liquidity here. Sellers eat up the liquidity at the value area low. I'm sorry, buyers here. Sellers consume them. Buyers here. Sellers consume them. This becomes resistance, going to zero. Watch. Now, what you could be doing with this is you can put a little bracket around these if you want. So I kind of look at these, and it's just kind of the way I've kind of done this. And it's for my sanity. Probably need to get more sanity. Let's watch. I'm just putting some ideas together here for you. Maybe that'll work. Maybe not. Let's try that again. So I do is I'm looking at liquidity, and I'm looking at the behavior, and I'm also going to be looking at sweeps and locations. So let's take a look. This is a location. Break through it. It's now resistance. I get here, break through it. It's now resistance. This is a buy sweep. right here, this is my resistance. If I can get below here and break, I can go lower. So let's watch. This is my resistance. There's no precision. In the auction, I'm outside of this structure, which is an auction. If this price in a fractal, this is a high volume node, is too high, it's the same as this being too high. But when I go down in time frame, I'm actually breaking this down into shorter structures. So I can see what's too high, what's too low in here. Too high, too low, retail. And then as I'm coming down, it's the same thing. Too high, too low, retail. If this is too expensive and that's too expensive, I'm going lower. What happens here? Too high, too low, retail. It's right there. No clue, by the way. Too high. And now I've got right here my buyers. I see the change in behavior. Have you seen buying like this anywhere? We had it there, but that's too high. In fact, I got to mark that. Variable high volume node. So that becomes resistance where I'm marking right now up above. When I'm trading, I'm just doing this automatically. Mark this, boom, boom. All right. So this is my resistance right here. I'm going to extend this a little bit, hoping Bookmap will make this so I don't have to do this. So this is your resistance. This is a sweep. This is just lower. Okay. The buyers are here. There was absorption there, and there's the buyers. So I got the buyers, I got the sellers, and pick one. Stacking liquidity here skews the book. Stacking liquidity here. And we got to see what happens. Okay. No clue. Watch. Ooh. Wow. Okay. What does that tell us? Now we don't know. Okay. Right here, going to zero. No clue. Here, the buyers are there. That's what creates this. The sellers are here. That's what creates this. So this is my sandbox. When I break out of this, then what I know is, well, obviously my buyers are here, but there's a little bit more than I know. Where did these buyers take control? It was there, right there. So let's put a little box around this thing because it's where things started changing. So break here, pull back. This sets up here, depending, potentially either along here to come back here, it's mean reversion, or nothing. Okay? You're just sitting here and your jaw's on the desk with everybody else. Let's watch. Now, I'm going to extend these. I want you to see. I'm not going to bother with this. I want to show you the structure. So what do we know? Too low, hindsight. And what about here? Resistance, right? Resistance, right here. Resistance, support, break high. Oh no, what happened? Now what? Support, support. So we have two levels. We have this for longs. And you're going to say, how do you know? I'm going to say, I don't know. And I have this. Two places. To get long. So these are longs. Here and here. And if you get long in here, your stop's got to be out here. And here is better because this is where the volume is. So you could be taking longs here, here, and wherever. And this is called mean reversion. So here you wouldn't know. I mean, it's like, whoa, okay, now I know there's a buyer. Look at that. Okay. So now I got my weak sellers out, maybe, and now my longs are coming in. And who's on the hook? Let's come back to how this works. Where's the shorts? Where's their stops? Opening swing high. In a balanced market, two-sided trade, everybody gets equally abused. So I know the sellers in here, including us. And by the way, where's these longs? Let me show you again how this would work. What I'm doing is I'm combining price structure with order flow. So I have this, and this for longs, and my stops are sitting here. So when I'm taking longs, and again, this one's not actionable. It's like, oh, that's nice. It's there. And where are we trying to go? Here. This is called mean reversion. So all we're trying to do is go here and then up here. And then here. Why, you ask? I know why you're asking. Because there's a 70% probability we'll get here, and for the overnight volume point of control, an 83% probability to get there. I know. You're looking at this and going, wow, there's so much work. Can I just click the mouse? Up to you. Me, not so much. Been there, done that. So you see the longs. There. There. And this is a short, by the way, too. Now, what's interesting about this, very interesting about it, is why would this be a short? Hope you're getting something out of this. What do we know? What do we know? This is the fair price from yesterday's RTH. This is the fair price, overnight VPOC, from the current ETH. What does it tell me? Language. Well, if that's too high, then what? In a balanced market, then what? Come back. So this is a short or an exit. This is a long to here. So the way this works is in balance, outside in only. No inside out, outside in. Why did it come up here? Buy stops, opening swing high. If you don't get buyers above this, then all it was a squeeze. And where do we trade into? Liquidity. What do you notice up here? Icebergs, buy stops, liquidity. All of this sets up a short, and it's called the IBF. It has a name, IB failure. I made them up, and this is a reversion trade because we're in two-sided trade back here, and then trade management, and you're coming back to where? Where were the buyers? There. And where's the stops? This is the other thrill. If the market will slosh on both sides, equal opportunity to be abused, don't we want to trade into the stops like these? And then statistics. And if we come back inside here, where might we go? Back to the retail price and then outside. And then if this is too low, we're going to come back around. This is called trading balance and mean reversion. And notice where we come back. Just saying. Isn't that interesting to you? And what is this? This is an IBF also. So this is the IBF to there. This sets up a long to there. This sets up a short back to there. This is rotational trading, and it's a specific plan. Do you want to do it? It's up to you. Do you have a plan for it? It's up to you. Notice, can you see something interesting here? Probably makes you as crazy as it made me when I was trying to figure out what's going on. How do I trade this? Or maybe I don't trade it. Maybe I get in the Barca Lounger and say, I'll see you later. Well, I lost so many dollars trading balance because I didn't understand the condition, something called context. So over the years, I really had to learn about what does it mean? Why is it doing this? You know? Well, how do I trade? It's really the more important thing. So this is the stops being taken out from the shorts. Now the longs are on the hook, two-sided trade. What happens to these guys who are long? They get thrown under the bus. What happens to shorts in here? They get thrown under the bus. Where's my location to get short? Outside edge. That's where are we trying to come? Here, the mean, the reversion. What happens if I come out here? Location, location, stops, sell stops, long, back to here, and then potentially up to there. If not, then not. Now what? Where's support? Here and there. So now remember, now I have no clue, right? So short, 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 long, and then back here. Now, if we command in balance, and this is the other thing, the possibility of what's called a neutral day. And a neutral day means take out the first hour's high, take out the first hour's low, which is there. And we can do that because everybody's getting abused. The shorts here, the longs there. The shorts here, the longs here. So each of these legs is getting abused. The shorts in here and then up here. Now, the fact we didn't get over here, the antenna needs to go up. Where's our support? It's here. Now, you might not be taking any long here. You might just go, what's going on? And leave it at that. So in Trader Lab, there are a number of trades here. And it's my least favorite condition to trade because it requires incredible discipline and patience. And as you know, because we're stimulated, fight and flight, it's very easy to be trading too close, too close to the inside. So it requires trying to see extremes get created. This one, though, is a real nice situation because of the stops that are open over the opening swing. So that's what sets up a really nice long. And then if you don't get buying above here, then it's just shorts that were squeezed, and then we can just trade both sides. So right now it's two-sided trade, and there is a possibility to take the longs out. Now, we had a conversation in Trader Lab, and then I'll look up if you have questions. Remember, support's here. When I take these trades, I pretty much what I'm doing with them is I'm waiting for location, and I'm trading towards targets, and I'm using a very aggressive trade management strategy because I don't expect a lot out of it. And expect isn't a good term. I'm just saying is range is what determines it. The auction is somewhat generic as far as how the market works. The thing about it is the auction changes. So we're in two-sided trade, but we can also get directional and still be two-sided. So it's kind of trades inside trades, context or conditions inside conditions. It will make you nutty because this is where, quote, time frame or fractal comes in. I think it was there, wasn't it? Something like that. And then down, I don't know if we got there or not. This is really where and the idea of coming out here is not at all out of the condition. Now, let me explain a condition to you. Since we came out here, and that's called range extension, but we're in balance. And if I come out here, it might, and not a recommendation, set up another reversion trade. So outside in is reversion. Outside in is reversion. Now the longs have their stops under here. I can very well come out and pick off the longs and then come right back in there. So all I have for today is outside in trading. This ding, 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 ding. And remember, if I come out, at least unless things change, and a tweet or whatever can always change anything. But as long as it's operating in this context, it's only outside in. And the outside trade from here, if I take this out and take the longs out, is the same trade as the short from here and here. Okay? Does that make sense, guys? How we doing in YouTube? So, guys, please give a like if you're visiting in YouTube. If this interests you, there's a link down there in YouTube. If you want to visit Trader Lab, there's no cost for it. Trader Lab's been around, I guess, going about 3 years now. And the idea of Trader Lab is to help you understand the business you're trying to be in and potentially create sustainability. And I want to, as they say, give you the straight oil from the can. This will be the most challenging business you've ever thought about being in. And there is a sequence of process to put together this business. And most retail traders don't understand FOMO. FOMO is being in a hurry, isn't it? FOMO is the dopamine fix to click the mouse. Casinos do really well with that. If you sit at a slot machine, every time you're hitting that thing, you're of course putting dollars in the slot, but you're getting that little thrill every time. Because what's going to happen next? What's going to happen next? You're getting that dopamine thing, and that actually reinforces you continuing to do the same thing. So we are the same, and here our dopamine is to click the mouse and get that rush of chemicals. If you don't, and you need to learn about that, because that'll take you out of the business before anything else will, is not understanding yourself. And it's not simple. You've never had to understand yourself like you will in this business. So that's going to require effort, focus, journaling, learning about your stimulus and your triggering responses to psychological or emotional stimulus and the chemical in your brain, chemicals that are released, fight and flight and all this. You got to learn about it. And the only way you learn about it is, first of all, creating a plan and then finding out why you have a problem executing it, in spite of the fact that if you actually do the work, you have an edge. If you have an edge, just like the casinos, think about this. Imagine you're a dealer in the casino and you play blackjack, you deal the cards and whatever happens. Cards coming out are random. Gamblers play the cards randomly. You have no control over any of that. You only control how you play the game, 7 cards, and you always do the same thing. Somebody walks out with a suitcase of cash, $100,000 in it. What do? Do you go sit back and go, oh no, I need a new game? Do you go, I'm going to skip the next hand, I need a breather? Or do you just deal the next hand? What do you think the dealer does? They deal the next hand. Why? Because the only way they get to extract the dollars over time from the gamblers is to play the game that has the edge. We have a real problem with that. That's where our psychology comes in, because we're all about winning and losing, and not losing. Winning that strokes our ego. Oh, I'm so smart. Well, no, you're not smart. What you are is in a random environment. It's not about smart, it's about edge. So you don't have to have brains to develop an edge, but you do have to learn about what an edge is, how to create it. So this is not about being intelligent. This is about operating in a random environment. And what do we think might happen here? Maybe have a neutral day. So what's our next trade here? And I don't call trades, anything can happen, is if we come out and we find our buyers, then we might be looking to come back here. Let's look down the food chain here and see what we have. Not much. So I have this out here, this area, and I have another level down at 37. Let's just go take a look at the higher time frame. This is a day really to be very patient. So we have 49 So this, if we look at this in a higher time frame, this is too low. And by the way, no precision. And this is our distribution up here. Distribution meaning, oh, I'm not paying that at the moment. Yeah, but it's outside edge means it's on sale out here. If I get under 49, I might come to the high volume over here, 38-ish. That's 10 points. I might not get there. I don't know. It's not my job. But I already know I have this, and I already know yesterday's retail price was 59.69. Where did I test? Here. Maybe too high. Well, then what? That sets up the shorts. And if I come under here, I can revert back to the mean. So what we're trading is mean reversion in multiple fractals. This is the mean from yesterday. This will make you nutty. And these little, and as think of the easiest way I think to visualize this is we're trading in market trades inside itself. Think Matryoshka dolls, a vertical integration of time frames as you think of them. Well, in yesterday's quote time frame, that was the retail price. And if we're trading the auction, which is what this is about, and the function of the market is to figure out what's too high, the market will check what's too high. It's no different if you go to a higher time frame and the market checks what's too low. What's too low? Here. That's yesterday. Too low. And then we go down in time frame to the daily time frame. Don't forget, this is multiple days, intermediate, if you will. And this is yesterday's retail price. If I'm below it and I come back to this area and it's too high, I can go, nah, I'm not paying that. And now we're going to try to find too low. Where's too low? Well, 49. And there's no precision. You don't put an order out at 49, But what do we know about 49? Maybe too low. Do you see how this might work? Are you guys tracking? Are you getting something out of this? This is Trader Lab, and no, you might want to step on a rake before trading this, but you can learn to trade it, or you recognize it, and if you don't have an edge, you say, nah, order some pizza, get in the Barca Lounger. Are you guys tracking? How are we doing? Okay, here's something else. Can I assume your trading strategy is to find liquidity? Well, Zed, no, my strategy is to look where liquidity is. However, the liquidity is not the primary input. The primary input's the condition of the market. That's called context. And as long as the context doesn't change, and it can change any moment, of course, I'm trading outside in. I can't trade inside out because if this is the fair price, think of it like if this is retail, isn't, the old saying, buy low, sell high, right? Well, if this is retail, I don't want to do business at the fair price. I want to try to locate an unfair price so I can come back to the fair price. If I find an outside price that's too high, and this is called mean reversion. This is the mean. So, and I was talking about vertical integration, Russian dolls, Matryoshka dolls. If in yesterday's time frame, this is the retail price, I can come back here. If in the developing time frame, this is the retail price, I can come back here. So I'm trading fractals. They're inside each other. So based on the context, it's only outside in. The problem, of course, with all trading is, where's the outside? I know where the inside is. That's not hard to see. It's where all the volume is. And now I'm doing this. And what else do I know? I got the buy stops out, and unless I get buying above here, I'm not going anywhere. Doesn't mean we won't later on in the day. Right now, and I know there's sell stops under here. Now, we were having a conversation before the stream started in TraderLab. Now, I think it's just as possible that we take this out. Doesn't matter to me. By the way, doesn't matter to me? No. Why? Doesn't change what the market will do. So does it matter? It only would matter if I'm sitting long, and then it might be a stop. But what's my condition? Absorption is here. Absorption is here. Retail is there. And I'm doing this. So as long as I'm doing this, I can trade one side, I can trade both sides, or I can trade no sides. I can just be in park. This is all you got here at the moment. So my range, and I can't execute, if you think I can like buy it here, no, I can't. What I can do is I know what happened here, absorption. And I won't know until hindsight. When the buyers are above the sellers here, I know it was absorbed. Until then, it's going down. Now I rotate up. Where's my possible location for a long? It's going to be there and here. And my stop has to go under here, and I'm trying to come here. Now, the point of this is, do you want to trade this thing? You could. If you enter well, but your stop's got to be under here, and you probably won't enter until here. So you got about a 3-point or 3.5-point risk. And where you're trying to go, maybe 6 points, or, that to me is real borderline. To be able to trade this, the thing that you got to be thinking about is range. And it's not the range from here. It's the range from your entry, your risk, to there. And does it justify it? And then if we come across here, where am I trying to go? Back here. This is a reversion trade. So this is a structured trade in TraderLab. You could be doing this, if that's your plan. For me, it's a lot of brain damage. So, but I trade it. But it's a lot of work. Now, remember the other piece. Longs are in the market. I have a taper which says right here that we've spent less time down here. The hint from an auction perspective is, if the market spends less time, that means the sellers are less willing to sell at low prices, and the buyers are more motivated, which suggests back here and maybe back here. That's what I know. So all this is auction based, and this is very nuanced. This is, this will drive you crazy. You guys have questions. This is called balance, and this is mean reversion. And in a TraderLab, the joke's, it's mean. It's mean because you could throw yourself under a bus trying to pick, if you're FOMO oriented, you can't, you've got to wait for outside edges. And that's very hard because of FOMO. You need to become, in my opinion, detached. What do we know about this? Maybe outside edge. If I come under here, I'm already going to look for a long, not a recommendation. If I never come under here, then I'm just going to slosh. I think the possibility is pretty good. We will get the stops and then come back. That's my plan. I'm sticking to it unless the context changes. And it's not a trade recommendation. Range days are the egos. Another chance to feed it. Don't. Means trade the edges. That's where value is. Value you can flip. Zed, did I answer your information? The bias, Zed, is really created by the behavior. Where do we open today's RTH compared to yesterday's RTH? Where are we opening relative to the last auction, which is the ETH? What do I know? Here's the thing. What do I know? Let's talk about what I know before the open. That's why I spend a lot of time on the open, and I post like a lunatic in TraderLab to help the traders understand and learn. The whole idea of TraderLab is to give you an education. But I can't give you the answer to the sense of what's right for you. I can do is give you an understanding of how the market works. And then you isolate, and I'll help you with this. And this is, we all help each other in Trader Lab. It's a community of traders. You know, we've all walked in the same shoes. So it doesn't matter how long you've been trading. If you're new or if you've been doing this as long as I have, long time, we all do the same things and have done the same stuff. And we've all looked for the Holy Grail, and we've all thought, well, maybe if I buy this or go to this chat or do this thing, everybody's done that. Now, when I started trading, there were no chats, there was no internet, and there's no PCs. It's all a little different, right? All my friends were floor traders, and there were very few off-floor traders because the technology really didn't exist. So it was very difficult. My first thing was classical bar charting. And I thought that was trading. Oh, head and shoulders, how exciting. That kind of stuff. So I kind of started with that. And that actually was a problem, not a solution. But I didn't know that. Anyway, not important. But so can you see why this is where we might go? Oh, the hint. Retail price from yesterday and the ETH. What does that say? This is a language. I don't use any indicators, so I replaced indicators with speaking a foreign language. That's all I'm doing. I can look at this because I train myself to understand what it says. Your indicator is fine. What is it doing? It's using some derivative of price to translate behavior. But I can get short here because this is a trigger for me. And those with indicators might be thinking, oh, this is a long. No, it's not a long. What is this over here? Was this a short here? Or is this a long because you're in mean reversion? Indicators don't sort this out. They chop you up. And the reason I say that is because indicators are not context specific. They are just rotational. They just following the price around. And the comparison is, does the tail wag the dog or does the dog wag the tail? Indicators are the tail of the dog. This is the dog. This is the market right here, not your indicator. Because what is your indicator going to have you do? Now, here's the thing about indicators. Most traders think it's a business of indicators and time frames. I did. So more indicators, bunch of time frames, and more certainty and more confirmation. When you are doing that process of curve fitting, what are you seeking? Isn't it to avoid risk? Now, I used to think I was seeking profitability. What it really was is that was not what I was seeking. I mean, you would say, of course you want to be profitable. Yeah, of course. But that's not what we were doing or what I was doing and most other retailers are doing. What you're trying to do is fulfill your need to avoid risk and create more certainty. Now, they almost seem like the same thing, but what would happen if you realize that you're in an environment where there is no certainty? Then you can't solve for certainty in an environment where it doesn't exist. That's where the big aha moment was for me. I said, I've been trying to solve for this, and I get certainty under certain conditions, but over most of the conditions where I'm always uncertain, and I curve fit to fit the conditions where I see the big swing, most of the time, the market, if it moves directionally, it then goes into this. Well, if then I'm going to try to fit for this, well, what happens when I have a running market? I'm going to be fading it all the way up. That doesn't work either. What do I do? Where's the problem? So you keep doing the same thing and you keep getting the same outcome. Definition of insanity, isn't it? So anyway, so I figured out that, and it took a long time for me to kind of step back from it. And where did the decision come from to seek confirmation and certainty? It's very logical. The decision comes from the lunatic or the primal wiring under the hood, which is risk aversion, run from the predator. Your brain or your primal wiring cannot differentiate this environment from what is behind the tree out there on the tundra? Is that a saber-toothed tiger? Well, I'm not going that way. So we want to avoid risk. To avoid risk, we want to create certainty. Well, how can you create certainty about what's behind the rock? Can you? No. Well, if you can't create certainty, then don't try to solve for it. Try to solve for uncertainty. And that takes a different mindset and a different approach. That's why I agreed to do TraderLab, because there's no certainty. There's only maybe. How do you operate in maybe? Well, maybe, based on everything we know, the market's going to be two-sided, and maybe we're going to take out this low below us, and maybe, since the trend is up, and we have to get over this, we can get to yesterday's highs. The only thing and we can get to overnight mid. To get to settlement is a reach. Can it do it? Yes. Trend is up. Probability of getting to yesterday's high or low, 85%. That's what, for me, is, you might say, the fly in the ointment as far as just staying in this range. But I also know I can just have an inside day because I'm in balance. Well, that's what I know. Nothing else to do. I can come up here, or I can just stay in here. Papers on the bottom, which says there's more buyers down here than there are sellers, because we're spending less time, which gives you less volume. You see? So that's what I know. Other than that, I don't know anything. I don't need to know anything. I can't know anything more than this. So I just try to align. I hope this makes some sense. How do I prevent being myopic? Well, Ben, Bookmap is the tip of the spear. It's where in other words, everything else, all of this is before Bookmap. Bookmap is where I get down to the order flow and execution. And, where's the resting liquidity, and how does all this relate? But I'm not, and I'm always looking at Bookmap, but all these levels are on my chart before RTH open, all of this stuff. And I already know the condition of the market, and that tells me the plan that's aligned with the current condition. And the other part, then, is if the condition changes, my plan. It's like, we just went from driving in the mountains to back on the Autobahn. If we get directional, it's the Autobahn, pedal to the metal, overdrive, wear a helmet and goggles. Or I get in the mountains and I can't drive the same. I'm trading a winding road. So it's shorter, turn. See, Ben? Trading is not mechanical. And I know we'd all like red light, green light. Trust me, I built trading systems. I went there because I thought I could use, in other words, my understanding of indicators, and I built my own. I mean, I really did a deep dive. I shared an office with George Lane. He created stochastics. So when I saw oscillators early on, I thought there was the holy grail. Look, the line crossed over and the market went up, right? Now, let me do that on multiple time frames. Any of you guys do that? BE, I don't use GEX levels. No, I don't need them. Other traders do use them. I don't think, I don't use it. It doesn't matter to me, because the more things I have on my chart create conflict. So I'm a minimalist. If I don't need it, you won't see it here. Because I think our tendency, is to predict, right? Well, if I have something, let's just say I have a level sitting out here that's an option level or market maker level. Well, what do I do with that? Meanwhile, I'm trading this. What does that do for me? Does that mean the market will go there? Well, it might. In my plan, if the market's going to go anywhere, there's a good chance I'm going to be on the trade. Or I'm going to be out of alignment and I won't have a trade to get on it, and I just will sit here and I'll work on my crochet. So I'm just saying no, I don't use them. I don't believe you need them. But like everything, the answer is in metrics. So listen, here's something to think about. If I'm trading outside in, reversion trading, and let's just say there's a level up here, uh, and I do have levels based on the auction. If there's just another level up here, what do I do with that? Does it give me an edge? And how, if I even get to that level, how do I get to the level? Am I going to get to the level from here, from here, from here? So I'm not trading that. I am trading the rotation. So I'm just saying and it doesn't mean that there's not a right or wrong. I guess it's a matter of when you have inputs, what does it do for you? Or does it create conflict? I found just for me, we all use fibs probably at some point in our lives, right? Extensions, retracement, who knows? And I went real deep with fibs, and I mean harmonics and fibs and time cycles, Fibonacci time cycles. I mean, whoa, throw a few years in the hopper working with that. I'm just saying that I've done this stuff. So I would have levels out on the chart, right? Just like you guys. And it became, because it was random, stuff works. The problem we have as traders, and this is not referencing the GEX levels, is that everything works. Everything works. We had a magic 8-ball on the trade desk, and we'd ask it, should I get long or short? Sometimes it would say, ask again. Other times it would say, should I get long? Yes. All right. It worked as well as anything else. Oh, Johnny, yeah, no PCs. I started in 1980, Johnny. We're lucky we had fountain pens. So early on when I started, we had something called ADP Comp Trend, which was a terminal, basically. And I was down at the exchange here in Chicago. And basically, they ran an extension cord to someplace in Massachusetts to get data. And it had, I can't quite remember. I think it had some Wells Wilder on it. It's so long ago, I don't remember. The early stuff. DMI, ADX, if that rings a bell with anybody. Parabolic. Moving averages, very exciting. So anyway, that was kind of the early stuff. Then on balance volume, because we didn't have volume, we didn't have domes, there was no electronic trading, there was no internet, there was not a Zippo. So, pick up your phone, call your guy on the floor. Write an order on a piece of paper and timestamp it. So, that was it. So I go back pretty far with this. And so it's a lifetime of trading and paying an enormous tuition to try to figure out how to trade. Because everything I got out of the public space at the time was really not useful. In fact, I spent years trying to make something work that really was a defective process. But because it worked randomly, I actually thought I just had to make it better. It's probably the same thing, same story for you guys. The thing that is so difficult is we all have winning trades. I used to think, give me more winning trades. What I found out was winning trades were actually part of the problem because they were random. And I thought that fixing it and making it better would, it's so logical. But the winning trades were what kept me doing something that didn't have a statistical edge. I was just trying to fix it. And it almost seems like they're the same thing, but they're really not. Because if you don't have anchored inputs, you can't measure it. There's your catch-22. So retail traders tend to throw a bunch of spaghetti or some derivative of spaghetti on the chart and have winning trades with them. So then they think it's just the spaghetti or a little this, a little that, put a little Tabasco sauce in there. And now you're going to have the answer. Well, no, you've got the problem. Now that's probably very different than what you think. And I'm not asking you or suggesting you take my word for it. What I suggest you do is reflect on your experience. And I call that trader Groundhog Day. Working hard, and you got to work hard in this business, but waking up at the same place in spite of having winning trades along the way. That is the catch-22. Is that you? It was me. So I can tell you, none of us are different. It's what we're going to do about it that's going to determine the difference, not the experience we all have as developing traders. And most of us jump to chat rooms, I understand, and buy courses and buy the magic indicator. And you go on YouTube, it's unbelievable because anybody now will sell you anything. And I remember when I started in the business, we didn't have any of these, outlets. You bought a book. And I bought every book. Now, or you went to a seminar, and they cost, back in 1980 when I started, they cost thousands of dollars back then. That was real money. I went, I think, to two. One was just throw money away. I should have just slept in. Instead, I jumped on a plane, went to Atlanta, stayed at a hotel, paid big money, and came back with what happened. And then the other one was with Peter Stottlemyre, and that was the most useful one because I learned market profile from him, and he created it, so I was very fortunate, over CBOT. So, and then I couldn't trade with market profile because I thought I'd make it better. I said, oh, this will be really good. I'll have the profile, and I'll use my indicators, and I'll put them together and make something better. Wrong. There's a few more years out the window. See what I'm saying? And why would there be years? Because there's winning trades. I didn't understand the business. I truly didn't. I was always trying to fix it, but I didn't understand what I was doing wrong. And what I was doing wrong was I didn't understand I'm in the gaming business. I'm not in the business of being right, and I'm not in the business of predicting. I'm not in any of those businesses. That's fine. Except that's not the business we're in. We're in the business of maybe. If you're in the business of maybe, it's not about right or wrong. It's about only getting involved when you have a probability that outweighs the probability of taking a stop. So if I can measure, how do I measure if I have random inputs? I can't. I can only measure if I have anchored inputs. And that's in my primer webinar. It was the big aha moment. And why? Casinos only play blackjack the same exact way, and anytime somebody sits at the table, they deal the cards. Anytime a structured trade shows up, I take the trade, as long as it meets the requirements. And then I'm, quote, betting that over time, in a random distribution of outcomes, in a 100% random environment where I have no control over anything, other than how I play the game, that's my accountability piece, that I accept the random outcome, but I have an edge. And that edge is tangible. I can touch it because it's anchored. I can measure it. And if I can measure it, it is no longer my emotional chemical response to fear and FOMO that is driving the bus. It is tangible statistics that give me better control over the lunatic under the hood, my primal wiring, and the chemicals that are released that create fight and flight and fear. Does that make sense? How we doing? The IBF would be legitimate if we take out the low for a long coming back to the reversion. At this stage, where's the stops? Out here. So this is the last long. This is the scale. And then, now we have stops where? Here. Selling icebergs are up here. So the possibility is to come out here. We have resting liquidity up here, so we're going to look in this area. We can bounce. Now, for me, and this is not a trade recommendation, this is the outside edge of the distribution right here. There's a micro high volume structure from here. Let me get this put together for you here. Liquidity was here. They're back in the book. Let's take a look at what happened here. Right here is your sellers. I'm going to draw a little box around this thing for you, just so we don't forget where it is. Notice this. Don't forget that. Now, let's go a little deeper. Sellers are here. Sellers are there. Sellers took control here. Buyers were there. Buyers were there. Buyers were there. Absorb those sellers. So right here, up, 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 right? Right here. So let's put another little box around this thing. And this is just to kind of help you see structure, price action. And who knows? Now, these are not trade recommendations. I'm just isolating behavior. So here, too high, trigger, too high. This sets up either a short or an exit. Trigger, IBF, or short up here. Location, location, location. Okay. And then we know, now let's come back the other way. Oh, well, let's see, where are we? Okay. So we have this outside edge, and there's a micro high volume structure there. So these are areas I'm going to observe. I'm just going to throw a little line over here. So now I will not run in front of this unless we take it out. We haven't done that. So I don't sell this. If I was long, it's a target. So this might just be profit taking ahead of this swing. What's over here? Stops. So for me, I won't short this. If it comes outside and then I see a reversal, then I'm looking back. And that's still mean reversion. I don't do this. I'm not saying you shouldn't. I'm just telling me. Why? Because if I was long, this is a scale. Why would I sell it if I have a swing? There. See, I can't sell it. It's part of my rules. I'm not saying this won't be the high of the month and we go down and do the Acapulco cliff dive. It's not my job. My job is to learn and understand how the market works, why it does what it does, and how to get in alignment. Guys, I hope you got something from today. Appreciate you visiting Trader Lab. We have to trade what the market presents us and not make it up. That's the business of trading. If you're interested in Trader Lab, use the link in the bottom of YouTube. Visit the Trader Lab community. There's no cost for it, and you're all welcome. Please leave a like if you're in YouTube. It helps support the stream. Better yet, use the link down there. You do have to confirm your Discord email. It keeps the spam out. And I'd like to meet you personally in the Trader Lab. These streams are available for Trader Lab participants as well as all the resources, context, statistics, data mining, and the rest of it. Trader Lab is an advanced process for developing traders. Doesn't matter how long you've been trading, but you might want to check out the Trader Lab. Thanks again, guys. Have a super day. Be patient. Develop a plan that has a statistical edge, or otherwise just work on your crochet. Take care.